Let's talk about tax strategy for YouTubers, content creators, and influencers. I'm gonna show you how to use the tax code properly so it audit proofs you and allows you to take off some things from your taxes. However, not everything you use is tax deductible. And this video is gonna explain what is, what isn't, why it is, and why it isn't. So in 2019, MrBeast went on a podcast and admitted that he was spending $500,000 or more a month creating videos. And remember, this man gives away cars, he gives away money, he gives away houses, and he had no idea if any of it was deductible. Well, in this video, we're also gonna look at makeup influencers and even WhistlinDiesel himself, and how MrBeast writes off a car is very different than the way WhistlinDiesel writes off a car. So let's say you're just getting into being a content creator. There are gonna be expenses that you are gonna have to incur in order to produce revenue, right? You're gonna need a camera, you're gonna need a microphone, some editing software, maybe some lights, and all of that is necessary and ordinary for you to deduct that. Well, ordinary and necessary in this context falls under section 179, and that allows you to deduct the price of that in the first year. Now, how does that help? Let's say you're making, I don't know, a video and you're pitching water bottles. Okay, great. You go out and you buy some water bottles. Well, that is deductible to you because you bought it for the purpose of using in the video. That's going to be deductible to you because you put it in the video, you talked about it, you bought it only for use in the video. That is how you need to think about this. Is it used for the creation of content to create money? That is your goal here. Now, is it ordinary and necessary to do that? Yes, for that particular video, it is. Your camera is, just like your microphone is, just like your camera mount is, and the lighting behind all that. It's all necessary for the production of that. Now let's extrapolate this over to MrBeast. MrBeast has a production company, so you can imagine how big his expenses are. All of that is ordinary and necessary for him to create content. So this is the really safe area for you. These you don't have to worry about. You're good with these kind of expenses. We'll get into the other expenses later, but for right now, just understand your camera, your microphone, your lighting, your editing software, good to go. So now that you know what you can deduct, let's talk about the Cohen rule. Because the Cohen rule is really your savior if you're a terrible bookkeeper. It's based upon a 1930s Broadway star named George Cohen who got audited, and the IRS basically disallowed all of his deductions. And he's like, what the hell, man? I need all this. These are legitimate. Well, they went to court. The court sided with him and said, hey, look, he may not have the receipt, but he's got bank statements, and he's got this warranty card, and he's got some other things that show that, yeah, he bought it and he uses it in his work. Now, that's great. Because if you are a terrible bookkeeper like George Cohen was, then this rule is here to save you. But I will tell you, it doesn't apply to everything. It doesn't apply to meals, doesn't apply to entertainment, travel, business gifts, and something called listed property. We'll get into listed property in a minute, but I just want you to know that if you went and bought something like your camera and you don't have the receipt, it's not the end of the world. So let's talk about Mikayla. Now, if you know who Mikayla is, you know that she reviews a lot of makeup. When she started out in 2020, because she got furloughed during COVID, she was going out and buying her own makeup and working in her house or in her apartment, filming it herself. So she was buying it herself, filming about it, and that is a legitimate deduction to her. It falls under section 162. That's in the easy category. When Ulta or e.l.f. or any of the other brands send her something and they expect her to do a review on it, that becomes income to her. So for example, if somebody sends her $300 worth of foundation, she technically has to claim that $300. However, there is a rule out there that says if there is no expectation of receiving a benefit back and it is a true gift, then that's different. That's called the Duberstein rule. And the Duberstein rule is, hey, what's the intent behind this? Were you sending this to Mikayla so she would do a review and you expected to tap into her 17 million followers? If so, the IRS knows about that too. And they're gonna say, hey, Mikayla, you gotta claim that. How does this work for you? If you're a creator, and let's say you're a gym creator and you're at the gym and somebody sent you a package of protein bars and you're on video eating a protein bar, yeah, you need to claim that money or the value of that protein bar pack in your income. However, are you gonna get audited for like a $50 box of protein bars? Probably not. But the rule is you should claim it. So we're gonna get into MrBeast and WhistlinDiesel and how they write off these massive expenses in a minute. But I wanna wrap up the easy stuff for you. And to do that, I need to tell you about Tucker versus Commissioner. It's a 2023 case, an influencer that got audited. She was a fashion influencer, and quite frankly, she told the IRS, I'm a fashion influencer. All this stuff is deductible to me. Well, that was good right up until she started doing home renovations and tried to write it off as a home renovation fashion influencer. So for you, what you need to do is you need to keep your focus here. I have to say, I am this type of influencer, and everything that falls into this world is for me to make content. For example, if WhistlinDiesel, who we all know likes to do yeehaw shit and blow things up, suddenly said, you know what, now I'm a fitness influencer and I'm gonna write off my gym membership, the IRS would likely disallow it. All right, so let's talk about MrBeast and WhistlinDiesel. If you don't know, MrBeast is a huge social media personality, and he's known for giving away cash, cars, houses. Now, as it relates to WhistlinDiesel, his real name is Cody Detweiler. He's known for buying cars and blowing them up. And it's kind of cool, but do you see how their purposes are different for buying the vehicles? MrBeast is buying his vehicles through his production company specifically to give away. He is not going to use it for personal use. WhistlinDiesel, on the other hand, is buying a Ferrari and blowing it up. Very different ideas, very different reasons and rationales, and that is where the distinction lies. What was the purpose in buying the vehicle? So MrBeast gets to classify it as a Section 162 business expense. WhistlinDiesel gets to expense the car under Section 179, but this is where 280F comes into play, and that is listed property. Listed property has to be used more than 50% or more in your business to get the deduction. And in order to do that, because this applies specifically to cars, you have to keep mileage logs, maintenance receipts, all sorts of documentation to show that, yeah, I have it, it's a business purpose, meaning that if he bought the Ferrari and then drove it around and then later 6 months down the road blew it up to get content created, he had some personal use with that. And under Section 280F, that's listed property. But that's not what he got arrested for. I cover that in 2 other videos that are here on the channel. Check them out, you'll enjoy them. But that is the difference between MrBeast and WhistlinDiesel. What should you take away from this video? If anything, take away this. If you are using it to create your content and you bought it to create your content and you're not using it personally, that is going to be deductible. That's easy. However, if you buy something and you use it in a video and then you use it personally out there, that's where things get murky and that can get you into trouble. I hope this has helped. Good luck. I wish everybody great success, but let's stay within our own lines. If this was helpful, hit like and subscribe. If you want to talk to me personally, click the link below and I can help you with your tax situation.